Good morning, Leah. How are you?
Good morning. Happy Thursday. How are you doing? I'm
I
wonderful
was
here.
I was hoping you were going to say Friday, but no, it's Thursday.
Yeah, it's the
So,
day before Friday, so that's okay.
yeah. Well, we have an extra day in my mind to make a difference out there. So,
There you go.
well, it's good to see you again. And
Absolutely.
before we get started, I did want to say thank you very, very much for the referral of that wonderful family from San Jose that we were able to help.
No,
Um,
absolutely.
Made a big difference in their lives. For those who are watching, Leah had referred my company, USA Lending, a reverse mortgage candidate, and we were able to help a retired couple over 80 years old who still had mortgage debt and a car payment on fixed income, struggling with inflation. We helped them eliminate the mortgage payment, eliminate their car payment, and we also got them a sizable amount of cash out. And what they were able to do with that is make a gift to their daughter, and they were able to watch her buy a home while they're still here with us on this planet. So, what a wonderful outcome for this family. They're living uh, debt free or mortgage payment free and no consumer debt. I think we even threw in a credit card in there too. So, wonderful family. I was super blessed to help them, and just it was a really good feel good transaction for sure. So thank you, Leah. Really appreciate that.
And it's so transformational. I mean, imagine being in your 70s and 80s and still carrying debt, still having to pay that mortgage, the
Yeah.
burden and the feeling that must be. They are so elated. And I have to say, Greg, you really give that white glove service through the entire process. They are just so overjoyed on both ends. The daughter's overjoyed because they received this wonderful gift, and also the parents are overjoyed because now they have been able to give the gift to their daughter, but at the same time mitigate their
Yeah. Well,
monthly.
they don't have to write checks every month.
Yes, exactly.
That's a
They can
big deal.
truly enjoy their retirement.
Yeah, and they deserve that, well, everybody deserves it, but if you're beyond 80 years old, and you should not be making debt payments anymore. So,
Yeah.
um, anyhow, so moving on, that's it. That was a feel good story, and we do have another story to share today, and that's unfortunately someone who didn't plan efficiently. So there was another family that we took a look at, and unfortunately there was too much debt on the property. It could not qualify for reverse mortgage based on the life expectancy of the daughter at this point, who is over 62. But this could have been avoided with some strategic planning.
Yeah, for
And
sure.
so I'd love to dive in with you on that. I think it involves some life insurance strategy, um, you know, uh, proper estate planning, and
Yeah.
let's jump into that.
Yeah, for sure. So the family had a reverse mortgage on their property, which was wonderful. That was all well and good. And when the parents passed away, now client inherited the property, which all sounds wonderful and great. And in her mind, she thought she could simply continue with a reverse mortgage that her parents had absolutely enjoyed. However, because they didn't have the proper estate planning, the proper exit planning on that, she's finding herself in a quandary. She has a property now that has some equity. However, it's not enough for her to be able to qualify on her own to
Mhm.
get a reverse mortgage. And so for her, she's looking at having to sell the property. She was a caretaker for her parents for the past 5 years. So because of that, she doesn't show an income.
Right.
So even though she might have some equity, it's not enough in California to repurchase a home here. I mean, there just isn't anywhere in California that's going to
Right.
be, 300,000 or 400,000. And so what does she do? And
Yeah.
this is so avoidable with the proper planning. It could be really easy to think, well, my parents are taken care of. They don't have a mortgage, or they're not having to make mortgage payments, and when they pass away, we have some time to be able to reconcile that. But if you do some proper planning ahead of time, you can avoid leaving a financial burden to your heirs.
Right. So let me jump in here real quick. So she inherited the house.
Right,
There is still some equity in the house, but there's a reverse mortgage on the home. And for those of you who don't know, when the parents pass on or move out of the home, you basically have a year to as a beneficiary of to decide what you're going to do with the house. So the clock is ticking, right?
right,
So she needs to either sell the house or refinance, and she unfortunately doesn't qualify for either, and or for a refinance, either a forward mortgage, a traditional mortgage, or a reverse. She's
that's right.
likely going to have to sell the home. So then, since her parents have been there for decades and they have a very low tax basis, what does that mean? She might end up having capital gains taxes, right? So I'm not a CPA, I can't jump into that, but what would it have been like instead of inheriting a house with a tax liability and, you know, some equity? What if they had life insurance and she inherited the death benefit of the life insurance, which is not taxable, and whatever she did with the real estate, she did. I mean, maybe she took the life insurance, paid off the reverse mortgage, and lived in the home.
Right.
That's one strategy. Or, sold the home, took whatever she got, also got the death benefit from the life insurance, and bought another home. So I don't. I wish we could go back in time.
Yeah, for
But
sure.
maybe dive into, how that would have looked from a life insurance perspective, if you can, Leah.
Yeah, so think about it this way. If you're going into a reverse mortgage and now you don't have any debt, some of those dollars you freed up can go towards a life insurance policy that can be a true exit plan for that reverse mortgage for your heirs. Give them some working capital so now they have some options. They would be able to maybe like Greg, you alluded to, maybe pay
Sure.
off the reverse mortgage or even have some capital be able to pay down that reverse mortgage or maybe even qualify for a forward mortgage. It would give them some options and ability to keep the home in some ways. There's a lot of different strategies, but if you don't have any working capital, it's going to be very, very difficult to be able to do that. So if you're going from paying, maybe you're paying $3,000 or $4,000, you know, debt, credit cards, car note, mortgage, and all that, maybe it costs you $500 or $1,000 a month, something like that, to put in some life insurance. Because as we get older, life insurance becomes, a little bit more costly. To give your family some options, that's an exit plan. In my mind, that's a true exit plan for a reverse mortgage. It's not simply having some living trust. It's not simply having some final expense, maybe $20,000, $30,000 in life insurance. It's having a true exit plan for your heirs when they take on this property, because your intention was to leave this as a family home. It sounds like for a lot of families. And if we don't have that planning, just like you alluded to now, Greg, they're looking at capital gains potentially. They're looking at new cost basis and the taxes, just the taxes on a home in California that's $1 million can be
Pretty
probably
sizable.
more, yeah, sizable, more than my first mortgage. My
Yeah.
first mortgage payment was like $800.
Yeah.
So
Yeah. Let's unpack this a little bit more. And I alluded to this in one of our previous conversations. I talked to dozens of homeowners or prospective homeowners weekly. And most of our loan applications are in individual names, which leads me to believe that people don't have an estate plan at all, or a trust, or any, they haven't even thought that far. And so, what does that mean for them? Number one, if something bad was to happen and they were to pass on, the beneficiaries or the heirs would have to deal with probate, right?
yeah.
That's a nightmare. Let's talk about that.
Yeah, for sure. And I'm glad that you're bringing awareness to that. If you don't have a living trust And I'm gonna upgrade that language and really say a true estate plan, because a living trust only deals with your hard assets like your real estate. But even bare minimum, having a living trust avoids probate and the public probate process. And by the way, it's not only if you pass away, if you should become incapacitated. My 19-year-old nephew was in a truck versus motorcycle accident. He was in a coma for 4 months.
Wow.
Couldn't speak for himself. His mom had to go through some hoops to be able to make those medical decisions for him. And he
Right.
didn't have anything financial, but you know what? That could happen to us at any age. So a living trust, a true living trust, which is an estate plan, is going to deal not only if you were to pass away and avoid probate, but also if you can't speak for yourself, who can make medical decisions for you? Who can make financial decisions for you? Keep the lights on and pay your mortgages. So families who don't understand or don't take the time to put together a living trust, they're going to find themselves having to go through the very public probate process, which means all of your assets, all of your debts are now public. All your friends and nosy neighbors know everything you own and everything you owe. And the courts will literally have you liquidate the estate. They're not going to preserve what you deem is valuable to transfer to your heirs. They're going to have to liquidate your estate in a fire sale. We've all heard of probate sales. That's what it is. And so once they've paid the court fees, debtors, creditors, filing fees, attorney's fees, whatever is left is going to be divided equally amongst all your heirs. So regardless of how you felt or what your wishes were with your estate, it will just go directly to whoever is your direct children. And if they're not living, then it will go to their children. But you don't have any control. You make no decisions. There's no emotion behind it. This was a family heirloom. This was something, a tradition. None of those values are transferred if you don't have a proper living trust and estate plan.
Yeah. So for context, I have a beach house, right? And
Mhm.
so, my family loves to go to the beach house. If I did not have a family trust, um, that could if I was to get hit by a bus, and my wife did too, we were walking across the street together, the probate court could force the sale of that desired family asset. And then my
Yeah.
kids would never have that beach house again. And then they'd have to
Yeah.
buy at whatever the current market prices are, which they're gonna have to pay higher property taxes and start all over again building that dream, right? And
Right.
so that is absolutely imperative to have an estate plan that's properly funded and recorded, by the way. You
Yeah.
can't just write it down in a book and call it an estate plan. So what's the difference between, like, how would somebody properly fund and record, all of their assets into a trust?
I love that. I'm gonna answer that, but I wanna kind of go back a
Okay,
couple
yeah,
pages because what you said gave me chills. I've seen that scenario happen several times. This was the family vacation home that every Christmas, every holiday, they spent all their summers there jumping into the water. They have friends that they've grown up in that area, and now someone passes away and they have to sell that. It's not just the value of the property, but it is the traditions. It is your family traditions that now they're gone. So
right.
it's about the asset, but it's also about our family, right? And
Mhm.
what we're trying to preserve and what we're trying to accumulate. So absolutely, I love that you shared that. And I'm glad that you put the protection in place for that. So a proper estate plan, if it's not funded, and I see this often, this is probably the biggest mistake that I see. They take all this time, they spend thousands of dollars, they've got a living trust, they have an estate plan, but they never properly fund it. Think about it this way. An estate plan, a living trust is like a box, but it's an empty box. And you have to put things into the box, such as your real estate. And how you properly fund it is it has to be recorded. You take your new deed down to the recorders. They're going to stamp it. You're going to pay a fee, depends on your county. It's usually about $200 or so. And now that property is now recorded to be into the box. You put it into the box. So it's super crucial that the deed is created properly. all the names are spelled exactly correctly. If you have a designation, a junior, a senior, or anything like that, has to be exact spelling. And you do have to take it down and get it recorded. And that's called funding the trust. And by the way, when you put something into the box, if you have a revocable living trust, you can simply take it out of the box if you need to refinance or you
Right.
sell the home, you still maintain control. However, if you do a refinance, remember, you've got to put it back into the box. You got to put it
Back in the box.
Yes.
Yeah, no, that is absolutely critical. And again, I will attest as a mortgage lender, most of the applications that we receive, very few actually have a trust. And I know this because every time we get a trust, we have to underwrite the trust. And so we have to have our underwriter approve the trust because sometimes it's not a revocable living trust, it's an irrevocable trust. And there are certain restrictions on a trust that's irrevocable. And usually those end up, we're not able to fund a loan in an irrevocable trust, traditional loans. There are some Alt-A loans that we can, but to make it simple, folks, if you don't have your real estate or your business or your checking accounts and savings accounts and money market funds and all your wealth, whatever you have, assets, they need to be in a trust because you're just doing your family a disservice.
Yeah.
Absolutely. Probate's messy. Your heirs, if you have multiple kids, it's likely they may fight about stuff. But in your estate plan, in your trust, you can literally in your own words explain why someone's getting one asset versus someone getting another asset or why they're splitting it. So you can tell your story as the parent. It's really important.
That's so critical. I love that you said that. It's not just about dividing the assets, but it is leaving your rationale. And when you do that, then even if they don't agree with it, they understand that your words, this is the way mom and dad wanted it to be, because oftentimes if they don't have your words, they're going to remember your words in a different way, probably, right?
Right.
And everybody has their own truth and their perspective. So that's a great point.
And so let's say I have a trust. How often do you think it should be updated?
Yeah, and let me say this disclaimer, I'm not an attorney, I'm a financial strategist and insurance professional. My role with the Living Trust is to help clients get prepared and organized so that when they meet with the attorney, it saves them money and it saves them time. So as a result of that, I see many, many trusts. And so, I'm sorry, I forgot your question.
Oh, I was just gonna say, how often should somebody update their trust?
You should update it anytime you have a life event, a birth, a divorce, a marriage, you sell, buy something. You should review your trust every year, just like you do your life insurance and all your other essential documents, because the language becomes outdated.
Hmm.
Not just if something changes, but the language can become outdated. And here's kind of a tip. If your estate plan or what you believe is an estate plan is only about 20, 30 pages, it's probably a living trust. And if you own other assets other than real estate, it may not be enough. Usually, typically, anyone who owns a piece of real estate is typically going to need an estate plan, which is all the supporting documents, all of your intellectual property, all your explanation and your wishes, and also your family values, your traditions, what your intention was. You can leave your wisdom, not just for your family, but for generations. That's creating true generational and multi-generational wealth is when we have a true estate plan.
Right. That's awesome. So you're in Monterey. How long have you been in Monterey?
About 3 years now.
3 years. Nice. It's
Yeah.
beautiful down there. I haven't been there in a while, but we used to take our kids down to that area, Santa Cruz, all the way through Monterey and Hollister, and we used to enjoy vacationing there.
It's gorgeous. I pinch myself every single day. I mean, right now, it's just so beautiful. This is like gorgeous time of year. It's
Yeah,
difficult to stay indoors to go to work, but my office is right down the street from the wharf. I can walk to the wharf, walk to the beach. My gym is down the street. Restaurants are here. I mean, I just am like, oh my gosh, it's so beautiful.
that's awesome. Nice. So how, besides helping folks prepare for these meetings with their estate planning attorney. What else do you do?
Yeah, I really like to start with the end in mind. That's why I love doing the living trust, because if
Mhm.
I know what the family, their ultimate goal is when they pass away, then I can reverse engineer everything else. I help families as a financial strategist. I help them to properly protect, distribute, and transfer their wealth. And so part of that is their life insurance. Maybe they own a business, they need a succession plan, exit planning for their business. And at the same time, long-term care. I actually have a free one-page financial plan. It's the Wall of Wealth. And it literally will help you to understand what layers you need to put in place. That's a basic. We all start there. And once we have those elements satisfied, then we can talk about other things like buying and selling real estate and Bitcoin and stocks and all that. Sometimes people get a little bit bamboozled or sidetracked, right? It's a sexy squirrel.
Yeah,
Right. Let's become a real estate investor. But then I peel back the onion, Greg, and they have no life insurance. They don't have an emergency fund. They have no idea what they're going to do for taxes and long-term care and all of those things. So going through your own financial plan and really taking a SWOT analysis
mhm.
of what you have and maybe some gaps, some blind spots in your own financial plan. It's free. Reach out to me. They can find it on my LinkedIn. They can also go to my YouTube channel, The Wall of Wealth. We post a lot of videos and free content there.
It's great. Now, how do they, besides LinkedIn and YouTube, how do they get a hold of you?
They can reach out to me at my direct line, which is 408-625-0613. Call, text me is probably the easiest way to get a hold of me.
Awesome. Well, I'm Greg Sandler with USA Lending. I'm available at usalending.ai. You can just make an inquiry there on our website. I actually receive all the inquiries directly and then personally call everybody back. So usalending.ai, licensed in all 50 states for all your mortgage needs, and here to serve. So thanks, Leah. Thank you for joining me this morning. And again, thank you for your referrals. That's amazing, and it's an honor to help your clients.
Appreciate that. I look
Awesome.
forward to future endeavors.
Yes. Have a good one.